Hi everyone. So let's start with the collateralization, okay? And basically, a lot of people think like the vaults are the collateralization, but it's it's not really true. If the vaults would be the collateralization, like what I'm trying to do with this is like to copy other financial uh, systems, for example, a CFD broker, okay? Or like BitMEX, for example, BitMEX, okay? Um, in BitMEX, you in BitMEX there are liquidity providers, okay? And that's how they are called. In cryptocurrency, you better not call them liquidity providers, otherwise you need like a whole day of explaining it to someone on Twitter that you're not talking about people that put liquidity into uh, the market maker, like on Uniswap. But what I mean is there is like a person that, or a group of people that somehow back the system. Like it is actually, it's they're lending out money. For example, someone makes a big profit and they are lending the money to him. In traditional finance, this is called liquidity providers. Uh, so, for example, BitMEX, they have liquidity providers. In Deos, we call it vaults. Okay, and what you need to understand is everyone in Deos is like, yeah, when there is a big profit and vaults taking a hit and this and that, but you need to understand the liquidity providers in BitMEX, they always win. They always win. Jujom, no questions, okay? No questions now. If you ask a question now, there is the potential that you're not getting it answered, okay? So just wait. Okay, so we have the BitMEX, we have liquidity providers, we have also liquidity providers on um, CFD brokers. So there is like, for example, in BitMEX, there are people vouching or like backing the trades. And for example, in CFD brokers, okay, and in CFD brokers, it works like this. There's like a spread, okay, on each pair. So there is like a percentage. In Dios, this is for the beginning, it's fixed at 1%. So there is a 1% spread applied to the trades that is going to the liquidity providers, the vaults. Then and then there are also something like funding rates, or somehow like there is like the one side pays, like longs pay shorts constantly. It's not that that only like the losses of the trades are constantly applied, but there is also some kind of funding rate that is applied all the time. And all of this, like the spread, the losses, the funding rates, all of this take the pressure of the liquidity providers and leave them with their pure profit. And in terms of like when there is a big, someone makes a big profit, they're lending out the money, but overall they're more keen to overall win. I got this sheet of um there was like a, yeah. So yes. there was like this comparison, like how much uh, on those platforms people are losing against people that are profitable. And yes, for me, I think we should keep this as balanced as possible. I'm pretty sure platforms where there are more winners, there's also more trades. But in the end, the liquidity providers, they are the ones who are always winning, most of the time winning. And this is because we have the losses, we have the funding rates, and there is a spread applied. And all of those things, like the funding rate, they it's depending of the volatility of the asset in deals. Also in brokers, there's like some assets have more funding rate than others. And in deals, it will also be pegged to the imbalance of shorts to longs. So basically, if everyone is going long and no one is going short, there is a there is a higher funding applied. Means you need to pay a little bit more fee in order to keep that long. And what this does is it takes the pressure off the liquidity providers, because that's what needs to be done. And in the end, when the system is completely balanced out, we can lower the over collateralization rate more and more and more and more and more. And this means the fees are getting higher and higher, like not the fees for the traders, but the APY, because when the over collateralization rate is going down, there is, for example, one trader for one liquidity provider. So APY is going up, and that's what we want. We want a lot of collateral, high APY, more trades. But we also want uh, that there is a possibility for traders to make money. So this will be balanced out all the time. It's pretty complicated, I think, in total. You have like the traders and basically, yeah, longs versus shorts. You have spreads and you have losses and you have the funding rate. And in a perfect balanced system, they are paying each other. Only in a short period or in a black swan event, there are the liquidity providers or the vaults helping out and covering that profit, so that like we could we could just we could have just started the system with this. Okay, we could have just said, okay, we're doing it with this. This is all we do. And but in certain events, there would be no counterparty. There would be no liquidity provider that could provide the payouts in that certain time, and we needed to wait until there is another loss to pay out the profit, which would scare away some traders because you think, okay, when I make some profit, I don't get the money, so I'm not trading there. So we implemented the vaults. So there is also in such events still liquidity there. And now I can directly flow into the next conversation about the road to mainnet. I hope this was clear. There was one person asking today about this. So yeah. So now the road to mainnet. So first thing is achieved. Okay, we have the testnet running. Testnet is running. I hope all of you checked it out. now in the next 10 to 15 days, um, we will fix all the bugs in the front end and with the scripts, things that you are experiencing. Okay, but there is a even bigger part in the background that you're not even experiencing what that we are focusing on, and this is making everything as secure as possible. That is like our highest goal. So what we're doing is we're decentralizing the oracles even more than what I said before. Um, we will also work on, so overall there will be like 30 days, around 30 days, and then we will launch to mainnet, something like that, with a trial phase. Okay, so this is the current plan. Of course, guys, understand that when I say here the plan is 30 days, it could always mean that we are finished earlier or later. This is just a vague plan that we're currently having. So we're working on the oracles, making them more secure, and then we're working on hard caps. So there will be hard caps in the beginning. So what we're trying to achieve is that the hard caps that we're having are as big as the insurance fund that we built over time in the DAO, so that even if there is a failure of anything, we can still recover from it. So that's the goal that we're having. So there will be a trial phase, and then going into the trial phase for longer, we will open the hard caps more and more and more. This is similar to what Maker DAO did. Um, and then we will implement more and more and more security features, which will give us the confidence to raise the hard caps more and more. We are not doing the hard cap, like we're doing the hard caps because we think um, the system should be battle tested. It should be, we should work on fine tuning everything. And in that time, we will already work on going to layer 2. So there will be 2 teams working. One team is working on security for the stocks, and one team is already working on the bridges and also decentralized oracles. So this will be what we are doing in the next 10, 15, 20 days, working on hard caps, working on the oracles, also applying the funding rate, so there can be no like people taking advantage of the system before. So that's what we're doing. Oracle's hard caps funding rate. So this is like how we're currently planning it to do. So the oracles that we are using, they already work. Otherwise, you wouldn't be able to buy something. If the oracles wouldn't work, you wouldn't be able to get a price here. Let's check. Here I got some, yeah. So thanks for following. Wow, that die is sweet. So yes, Alex, no problem. So does this work? Yeah. So you can see yes. What you see here is the spread, obviously. Obviously, this is the spread. People were asking why is it more expensive than on spot. This is obviously because of the spread. So there is a spread applied when you buy, and But you see, there is already the oracles. There is already the oracles that define the price. There is an oracle for every of that stocks. Every stock that you can see here, there is an oracle that gets the price already for all of them. Also for the ones that are not conducted yet. So every asset that you can see here, there is an oracle that fetches the price. Mm. So yeah. Yeah, what you can see here now, there is an alert. Basically, what it means is that the price is expired for that. So what you can do then is like you can reload, and then you load it new. Of course, when we're going to mainnet, the reloading will be constant. So let's see what. Yeah, here you go. So the oracles are already in place, but we want to make them more robust. We want to have zero attack vectors, like no issues. And still, if there would be an issue, so there would be like what we also do is like we're implementing like buy limits and sell limits. So there will be limits also on that side, and there will be something like a circuit breaker. So it means if the price of a stock changed more than X% per day, we will shut down the trading for that stock to see what's going on. If there is an exploit, because that's how someone would basically exploit the system in that sense. He would somehow take advantage of the oracles or the APIs, and then he would change the price. So we're implementing more and more security features that will limit the system at the beginning, of course, but it will also, like, I think it's better to start with some limits and test it, other than just roll it out and in the end there is a bug and a lot of people are losing money. So that's the way that we don't want to go. We want to use a limited system, something like a trial phase, alpha, beta, and then slowly increasing the limits. That's also something that Maker did. Uh, any recommended chart that we should use for our trades? For what trades? Mm, yeah, that's it. That's about the road to mainnet. So we're confident 30 days. No, there will not always be a hard cap. The goal is to have a system where you can just trade trillions, infinite liquidity. You can just buy in, and then the system is that balanced that even if someone buys in at that much, he system is still profitable. And that's what we need. Robust decentralized oracles so that you cannot exploit the prices, and a trading system that somehow balances itself out. So yeah, there will not be always trade hard caps. Like I think in a way what we're doing is similar to what SNX did with having the 500% over collateralization rate, where they had always like 500% in SNX as a backup to fund. And still they had a big issue because the oracles got exploited, because what is that's now our advantage because SNX had this exploit, so they're never touching again creating their own oracles, while we have someone in our team, Madi, that created decentralized oracles that are even more decentralized than the ones Chainlink has, and implemented them into BrightID, and now we can use his expertise to create oracles that are even more decentralized than the ones he built. And by this we can implement a lot more assets. I think on the test, like on the test synchronizer, we have already more assets than any other protocol out there. If someone finds a protocol with more than 600 assets, share it, but I don't think so. Also, even like centralized exchanges, we have more assets than most of them. I think Binance has also something like 500. So yeah, and it's only the beginning. We can implement more. We just need to plug in the API, and then we can basically list the asset. So that's the advantage. That's why we needed the I watch a lot of Elon Musk. Like 2, 3 years ago, I watched like every interview of him, or 4 years ago, um, and he always said like when he talked about it, it was basically because of Tesla. But he said when you're building something and you have a lot of uh, competitors, and there is also a competitor that is already like a trusted brand, and SNX is that trusted brand. Okay? So we need to do something remarkably better than them. And having our own Oracle is that one thing what we're doing remarkably better. So with that we can list a lot more assets that they ever can list. And then of course also the having that vaults in the background, having that uh, vaults in the background instead of the SNX to mint the dollar. We're basically bootstrapping the system, so you traders can even come with DAI, something they trust. They don't need to use Deus or something else in the beginning. Um, so yeah, we're doing this. So those are the points that are yeah unique to Deus. Good. Let's answer Jujom's question. Do I have to provide all the listed liquidity pair assets on Balancer in order to redeem BPT to stake on Deus app? No. The Balancer is called Balancer because you're able to, uh, because he balances out what you're putting in. So you can just add single asset. Okay? You can just add single asset here, and then he does the rest. You don't need to have every asset prepared, but you will lose to slippage. That's for sure. So oh, you can now short. Uh, you can short Bitcoin or long it and earn Bitcoins with it by longing and shorting on DSwap, on Synchronizer. Will assets charts roll out with mainnet? So look, you can already chart. You can already chart. Uh, you can already chart all the assets here. We already have the the whole S&P 500 here. Yeah, thanks, CoinLord. So that's the we already have the chart, but we will also build a exchange app where you can trade next to the chart, so it will look like a real exchange. That's that's the goal. We're already building it. You can just put the chart next to the swap, and that's it. So, hey, hi Algot. Thanks for following, and thanks for being back. So yeah, that's basically it. For we want to be sure that there is nothing going wrong, economically and also technically. Is very important because I think if you're doing something wrong in the beginning, it's very hard to recover from there. Like all the projects that got hacked in summer, or there was like some exploits, I think it's very, very hard for them to recover, if not impossible. SNX had somehow luck when they began the project. Someone that the one that exploited their oracles, they somehow got a deal with him, so he didn't uh, kill the project. But I think we should not risk it. So there will be hard caps, there will be limits, uh, and from there on we can make it restrict, de-restrict it less and less and less and less and less. So we're pretty confident about this. Marty is now every day also working together with the dev team on all of this, and from there on, when we have the stocks on mainnet, we will then focus on going to layer 2. And layer 2 will be um, a simple solution, okay? There is a lot of talking out there about optimistic roll-ups and other roll-ups and all of this and XDAI and this and that. And what we are visualizing for our or conceptualizing for the layer 2 is so that you have basically you have all the liquidity is still on ETH, and there will be bridges to layer 2 where you can deposit your uh, DAI, for example, and then you can execute all the trades without any fees, and when you're finished, you're withdrawing again. So it's the same. Um, how can we, the community, help with all of this in any way besides I think improving the wiki is the best you can do. Yeah. Improving the wiki is the best you can do. Because with the wiki we can educate the people, and we don't need to answer all the questions. So we educate the people, and then we have basically more people that can contribute. So I think the wiki is the best thing to do, to contribute, definitely. Because it should be like the community members that are already educated, they should educate the new ones. And so we can grow better. Imagine we launch the stocks and we are starting with marketing campaigns, and there will be a lot of new people coming in, and if there is not the wiki is not set up, people are not educated, there will be thousands of questions. So that's the way. And we are also there's also a person that will help us with explainer videos. He also worked for some other big projects like really big. Um, yeah, there will always be questions, but if you have the wiki ready to link it to them, then they are somehow served. So layer 2 will basically work like a centralized exchange. You can deposit your money, then you can execute all the trades, and then later you can withdraw again, more or less, depending on how you trade it. So you can execute all the trades without any fees. Of course, we are also considering like how could we also make the staking less fee intense, because there are a lot of people that don't have that much money. So there's also some thought energy going into how we can lower the fees on all the staking processes. But for now, we're more focused on the trading system, because like the trading system is basically our product. Um, I I'm imagining a system where you have like millions of assets, or let's say like 100,000. Okay, let's say 100,000 uh, stocks, cryptos, and commodities. Okay, and can trade all of this with no KYC and with zero fees and oops, and low spreads. Uh, and all of this as an Android app or somehow on the phone, and then we basically have a decentralized Robinhood. And what we can also offer, like I think they also do it, but all of these pre-IPOs, all of those pre-IPOs, IPOs in general. So that's the goal for the trading, and to to achieve that, we need to have the trading system in a layer 2, so there's zero fees. And then next step would be having the staking also somehow on layer 2. A possible layer 2 solutions for now is definitely ID chain, because uh, Madi developed it and they built it. Uh, yeah, Algod. Let's discuss the details later. Yes, yes, yes. Of course. I didn't say zero spreads. So we are building on ID chain because um, there is like 30% of our team that built it, so they know everything about it. Uh, Moving there will be way easier than moving to other layer 2 solutions. And what I'm also considering is either XDAI or AVAX, what we said from the beginning. Those are potentially the layer 2 solutions that we're interested in. Uh, yeah, we will definitely we will not give up all the security features we built in before. How does trading on DeFi shit save in tax? There are a lot of digital nomads groups on Facebook which are into stocks and always looking for ways to save tax. I think it's a good audience since most of them are also into crypto. Yeah, um, I think it's definitely a plan to attract all of those traders that are into Robinhood and other platforms into crypto, because right now there is a big crypto hype and everyone is basically interested in crypto. And if you can, let's say you have like trading 212 or eToro or Robinhood, and you have a similar platform that is decentralized and works in the same way and is on crypto, which is a hype, I think a lot of them will be interested. So yeah, that's currently what we're imagining to to build. Of course, there's still a lot to do. There is a lot to do until mainnet, until we are loosening all the hard caps, and from there on going to layer 2, having even more, even less fees on the trades itself, which can basically, which leads to more and more trades, I think. I'm pretty sure. At the like for now, trading on Uniswap, it's still high. That's basically the reason why the fees are high. But I think that Ethereum is even going higher from here, and then you will pay 5 times the fees. So it will get less and less attractive, and layer 2s will get more and more and more and more attractive. So we should definitely consider only like I'm only thinking of the trading system. It will still be possible. That's the point. It will still be possible because we already have the other system built. So you can still trade your stock on layer 2, and if you want, you can also withdraw your stock to the Ethereum chain and then hold it in your wallet if you want. But people that maybe don't want it and want to save fees, they can just trade the stocks on layer 2. It's a different approach than other projects that maybe started on layer 2 but don't have the potential to withdraw the assets. Mm, yeah. Also, yeah, also about conducting. Like, I think currently we need to. That's also something we're looking into, like lowering the fees to conduct the assets. Because currently, if you're checking out, conducting is like almost half an Ethereum. So that is because currently when you're conducting the long, you're conducting both. You're conducting long and short. So we will divide this. So you're only conducting one asset. There will be some changes that we need to implement, which will save around 50% of the gas fees. And then we will also optimize all the contracts. So our goal is to have it lowered to around zero point 0.2 ETH conducting, or even between zero point 0.1 to zero point 0.2. So we can conduct a lot of assets. That's basically uh, that's the decentralized nature of Deos, so that everyone can basically deploy the stocks. Everybody can deploy the stocks. So, but they also need to pay the fee. What we are also doing is like having like a rating, something like what Binance had in its early days, like a stock, like an altcoin of the month. We will have a stock of the week, and then everyone can vote for that stock, and then we will conduct it. And also everyone else can conduct its assets that he wants to trade, and then when it's conducted by someone else, he can trade it. But I think like having the Oracle solution on layer 2 means that we can really trade all of that assets. And even if you're just doing a $5 trade, that maybe on mainnet wouldn't make sense to you because the stock is not deployed yet, so you have to pay uh, uh, what $200 in deployment fees. Uh, then again $30 just to make the trade doesn't make sense. On layer 2 this will be possible. So starting on mainnet had the reason that of course there is more liquidity on mainnet, a lot more. I think I checked XDAI's total value locked is somehow around 10 million, so that's almost nothing. So I think starting on Ethereum has the advantage that there is a lot more liquidity available, and then you can bootstrap the system much more easily from there on. So everything is going as planned. Highest priorities are security and having a system that is economically working. Uh, Thanks Algot for all the input, and I'm pretty confident with what we have now, with a 1000% overcollateralization rate and the funding rates and everything. It is designed so the vaults are not able to lose. That's what we're aiming for. So there was one big concern all the time. It's like, what happens when there is a long? Okay, let's say uh, let's say you're buying a Tesla at 500 bucks. Okay, and you're going long on the Tesla at 500 bucks, and the same person is going short at Tesla at 500 bucks. So there is now basically $1,000 in the system. And let's say Tesla made 100% profits, so it's now trading at $1,000. Um, the person with its $500 short position, he should be completely out of the position. So even when he didn't sell, he shouldn't hold any Tesla shorts anymore, because that $500 is then going to the long position. And then even after this, you have basically all of that trade is now not covered anymore. So you need to have like a funding rate or something where there is constantly one side paying to the other, and it's based on how much difference there is. And in the simulations we did, it is always balanced out. So you have like shorts paying longs all the time, so that it's 100% covered. So that there is not even the need to have the over collateralization rate. And still, we're starting with a lot more. And from there on, we can lower it and lower it and lower it, and make the money more efficient. So it's maybe at some point 1 to 1, or 1 to 2, 1 to 1.5 backed. Where did the funky graphic? Oh, you mean like the Taurus? Yeah, that's a long story. That's a long story. But basically, uh, the the designer of the first Taurus, he we had a Taurus designed by someone, and he just copied it from someone else. But it wasn't really obvious, and so we went into discussions with that designer, and he just made an offer that was way too big in the beginning. We're still considering about getting it back or making a new one. So that's I like it. I like it. So I'm still considering uh, just paying him the amount and taking it for deals, and then creating some NFTs and selling them for more profit. So the Taurus is definitely a thing that needs to come back. Will you consider allowing users to loan borrowed DSINs eventually, or allowing some other way to profit from liquidity of the stocks they have? So, um, for now, for now, uh, what we're doing is synchronized perpetuals. Okay, so it's like a future contract. Okay, it's like a future contract, and but it's synchronized with the spot price. Okay, So you have like a future contract, like a perpetual contract that is synchronized with the spot price. And like those assets, they are solely having the purpose of in some way being for trading. So they are not designed for users to hold them in the wallets for long term. So mm, in that sense, they're not really good at uh, somehow being used as collateral. Oh, yeah, I check it. Okay, I check it later. Or should I check it now? I can check it now. But let's answer the question of the other person first. So, uh, will you consider allowing users to loan borrow deals since eventually allowing some other way to profit from liquidity of the stocks they have? Um, there is something planned. So what we're doing now is solely for traders. Okay, so the next thing we're doing is implementing leverage, and then the traders are settled. They have they can do leverage, then maybe also options. They can also set like a execution time for their position, and then the traders are settled. You have like all the products that you are familiar with, and then there is like the investors, and they want to have like a spot uh, trading. They buy a stock and they hold it. Um, but the problem with that is that a stock is has a high probability of just going up. So there must be, in a way, a system where there is constant liquidity provided for having those spot stocks that you can just hold. Um, there are some like I don't like the way that Mirror Finance did it, where you just have a person that needs to short the stock, because when we just said that a stock has a high probability of just going up, uh, there is a lot of people that when you talk like stock investors, they just buy a stock and then they hold it forever. So it's like common sense that you just buy a stock and you just hold it and it's 100% win. So when you have a something that the whole world thinks if you just buy it, it's a pure win. And then you have a system designed where in order to create the stocks, you need a other person that is betting that the stock is not going up. It doesn't work. So there will be some thought process going into this when we covered the trading systems on how we can uh, have a stock that is actually and somehow backed by its real uh, underlying stock. And then you can hold it. Then people can hold it forever, have a stock that is really uh, in some way uh, backed by its real stock. Because otherwise, uh, it would not be possible to sell the stocks, and there are people holding them in their wallets, and it's 100% profit. So first we start with the trading, and then later we think of ways how to, in a scalable and sustainable way, providing people the possibility to buy real stocks and hold them in their crypto wallets. Yes. So let's check charm option. So they combine all the calls into one. What is it? It's a charm options version. Is there a link? What is this for Twitter? hmm Yeah, exactly. Like this is how I imagine the. Wait, I cannot. Okay, they have only one option. Yeah, it's maybe just the start. Okay. So yeah, that's how I imagine it. So you can just open a position, and I in the end, it's like a fluid system. The, you can just when you're collateralizing the whole basket, and you have a lot more possibilities. I think that's also what they're trying to do. Is like, okay, instead of having each strike or each contract as a single entity, you're doing a whole market. And that's how I envision it also. So you can just open a option for any time on any asset. But I kind of like I want to do the leverage first and then the options. What do you think, Algot? I feel like you're like a option trader. This is like what you love because you're always talking about it. So yeah, it's definitely something that we want to do in the future. Yeah, I think also. I think also. Like, look, yeah, that's something good. Thank you, M39999. So, uh, uh, yes, of course. I think it's. I will check it out more. We'll check it out more. But I like the idea. I need to read it in without distraction. So I let you know, okay? So what we are designing is uh, a way where there's like a threshold system. So basically, those are traders' deposits, okay? And if it's going above that threshold, there is a payment to the LPs. And if it's going below that threshold, there is a uh, payment of the LPs. And the basically the task or the goal is to to never reach that threshold, to always be in a healthy, balanced system where you are moving in this area and you're never and all of like everything that we are implementing like hard caps, funding rates, spreads are designed to keep us in that area. So we have a very good idea of how balanced the system is when we're moving there or there. Because it should also be so that I think it's better to have the losses of the traders paying the profit instead of the losses going to the LPs. They they take the losses of the traders and maybe leave the system, and then afterwards you're having some profits, and the people that gained the losses they're already gone. So it's important to have this balanced. So what they're doing is you're providing liquidity for every pair, right? I think this is what everyone is doing. So you're having like the okay. And where can you provide liquidity? Can you even provide liquidity? Okay. Yeah, that's interesting because you're not relying on a separate liquidity pool. I think uh, leverage is something that attracts more trader. Uh, I think there are more leverage traders than there are like options traders. It's a, I think like options there's a niche, but I really like the math behind it, so it's definitely something I want to do. But I think leverage is a bigger attractor to like, a bigger audience. And then what I also imagined is like really having like when we're on layer 2, having the app, Android app, mobile app, leverage, also some kind of uh, like referral system where you can forward some links and then you get like a trading fee directly that is not going to the vaults, but there is like maybe a percent or something going to the person that, which will bring a lot of more traders. I think like this is how all of those trading platforms uh, came into existence. Good. If there are no questions anymore, that's it for the week. End of month, it's close. Any more hints on surprise for deer holders? So, um, there will be, let's say it like this, uh, there is already a hint out there, but it will also be like this that it's not exactly at the end of the month, there will be a disclosure, there will be more speculation, but uh, I don't think you will feel the benefit immediately at the first of the month. So uh, don't hype yourself too much about the date. Okay? There will be a surprise coming. There will be a disclosure, but relax about the dates. Okay? It's always very hard to. I I totally feel Elon Musk. I think it's always very hard to keep up with all the like time. Time is very. It always ends up different as you planned it. So yeah, don't be too specific with the dates, okay, with me, please. Uh, like I don't have time for anything else. This is like Deus is the full-time job of we're like 12 people, 13. Yes. Something like this, yeah. Those are the 13 people that I'm constantly, maybe even more. 15 people that I'm in contact every day. And we're working on deals every day. Good. Thanks for watching. Yeah, always in Algot. From the first moment that you joined, you already had a suggestion. Good. Let's see each other next time. Thank you very much. See you soon. Bye bye.